Although the United States did not move forward with its proposal to create a cartel of oil buyers, no one opposed the initiative. And thus market participants remained concerned about the ever-increasing risk of global energy shortages. If Western countries try to regulate prices for oil, its supply will shrink to almost zero. So it's not surprising that the quotes do not fall. However, it's worth nothing that oil prices do not go up as well. A rally in oil quotes is rather symbolic and insignificant. Investors are bracing for what lies ahead. If the US does not push forward with its idea of forming a cartel of oil buyers, the oil market will see gradual decline in the near future. This rather strange proposal of the United States also had an impact on gold, which posted solid gains at the end of the last week. Moreover, its growth is still ongoing. Last week, the metal entered a correction from the support level of $1,800 per troy ounce. As a result, the asset added more than 2.5%. However, buyers are expected to face a number of obstacles in the form of resistance levels. The first one is the mark of 1,870, which may well lead to a slowdown in the corrective movement. Earlier, gold saw a decrease in the volume of long positions in this area. The second resistance level is the level of 1,890, which will be considered by traders in the event of a continued correction. Still, if Washington really tries to form a buyer's cartel with a view to setting favorable prices for oil consumers, oil sellers will most likely switch to payments in other currencies rather than in dollars. This will undermine confidence in the dollar and its role as the world's dominant reserve currency. And in this case, demand for other safe haven assets, including gold, will sharply increase. However, as in the case of oil, if the idea does not go beyond the initial discussion stage, the yellow metal will face a downward correction in the near future. Continuing reports of ever-increasing volumes of oil and gas exports, coupled with a mounting supply of foreign currency on the Moscow exchange, in particular the euro, continue to support the Russian ruble. If nothing changes in the next couple of days, the Russian currency may well reach 55 rubles per dollar and then stay firm in the range of 55 to 60 rubles. Despite its highly overbought status, the ruble keeps gaining value, ignoring all technical analysis signals. The quote has already overcome the psychological level of 60. In theory, the ruble could have come under pressure in that area, but that was not the case. In this situation, one can only wait. Anyway, its upside momentum will fade sooner or later. The point is that amid such a strong rally in the ruble, industrial enterprises could lose their competitive advantages. This, in turn, poses a threat to the Russian economy. Thus, economically, the current exchange rate is clearly not justified. The impressive pace of the ruble strengthening has pushed the asset deeper into overbought territory. Thus, the market is long overdue for a correction. The only thing missing is a strong driving factor. Until then, the ruble is likely to continue gaining. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.